All right, welcome everyone. Weekly review starting November 7th. Forgive my cold. It's killing me, this thing. It's unbelievable. It was given to me by my youngest daughter. She brought it home from school, so these children have these nasty, nasty colds that you can't even shake. Didn't seem to affect her as much as it affected me, but nevertheless, it's pretty nasty. All right, what really wild and crazy price action last week, starting with when the Fed made its announcement that it's going to do $600 billion in quantitative easing with more in the pipe. You know, this was it's not good for the dollar for sure, but something's up because, you know, euro dollar should be 143, 144 and a half, which is where the major resistance is at, 144 and a half. But the pullback and the related crosses, you know, if you looked at Euro Swiss, it fell from 137.80 to 134 and a half. So something's happening. Now, I don't know if it's just a healthy retracement or this is the beginning of the market looking at, you know, the euro currency, you know, itself, because, you know, it is inherently weak. It has problems itself, but you know, when is it all going to blow up again? You know, when is the sovereign debt going to become an issue again? You know, but you know, obviously the United States is devaluing its currency. There's no doubt about that. But I'm looking at the British pound over here. Sterling, I was expecting a pushback, and we're starting to get it. I think that we're going to get a pushback around to the, say, 159 and a half level. At like 159 and a half, I would look at sterling Swiss, maybe look to buy sterling versus the Swiss franc at that point with maybe a 50-60 pip stop, all depending on where the dollar Swiss goes. But I think cable is on is going to retrace back down, and I would be looking to buy dips in cable because we still are in an uptrend in cable. I mean, if we just take our quick trend line right here, you know, there's trend line a higher value right there. This guy we don't need. Get rid of that guy. If I learn how to use this thing eventually, I'll be okay. Oh, whatever. Anyway, I need another line. Forgive me. And here's your current trend line. It's been popped a couple of times. This is the weekly. You know, they were showing some weakness here, but it recovered very quickly. Came back up. So really the breakout is around 158.80ish, and then you know, you got a move way back down here. So looking for a pullback to the 160, 159 and a half, should hit support and then come back up. Let's look at the good old euro dollar. This was a wild one. Let me tell you what a wild week. Okay, let's clear all this stuff. Euro dollar. Okay. Well, first thing we're going to do is we got a big retrace right back down to where this whole thing started from. So if I go from here down to there, shut this off. Okay. Okay, let's get a trend line going over here. Right there. Then of course we have a steeper trend line right here. It's basically breaking down. So this is basically saying it can retrace back down to like 137 and a half. You know, this is a wild currency right now. It's basically still showing that it's an uptrend. You got to buy dips, but 1, 2, 3, 4. Really, the breakout is 137. You know, if it breaks below 137, this thing can go back down to 133, no problem. This is going to be a real tricky currency to trade. I really having a difficult time with this. The more traders I talk to, the more confused I'm getting, because, you know, in one way it should go up, and another way it should go down, but we have to, you know, respect whatever market wants to do. Right now it looks like it wants to go down, so I'm going to be looking to sell rallies on this thing and see if we can pop, you know, get into, you know, like around the 139 and a half, 138 level. So I'm going to be looking to sell rallies in the euro dollar. Obviously, you know, I'm not going to stand in front of a freight train if the market starts showing that it's bid and I'm selling and it's not going anywhere, and I keep getting it taken in the nose. I'm not going to do it. Let's look at old dollar yen. Dollar yen. Has it finally broken up? No, not yet. We need to close above 82.10, say, to show dollar yen's changed a little bit. I think this is where the paradigm comes, because I'd like to be long euro yen. Okay, I think euro yen's a good play long. I still think that Aussie yen is a good play as well, being long. But then on the euro chart, it's showing that it's going down. So why not just be long straight dollar yen? That's the question I have to pose myself this week. Shouldn't I just go long straight dollar yen, and try to find a level that we can get in away from the noise, and see if we can catch the uptrend of dollar yen, because eventually dollar yen will break up. When, we don't know. Some people, Vlad thinks it's going to 78. I don't know. I don't think it's going to go down that low. But you never know with this stuff, But he's basically thinking 78, something like that, and then he wants to go long, and like he says, he'll finance the house, But I think we have a shot, We'll see how dollar yen, price action reacts this coming couple of days, and see where the low starts to be established. If dollar yen can't break below 80.5, maybe we found that short-term bottom that could push us up to 83. All right, let's look at some of the crosses. Let's look at euro yen, because this is the one that I really want to get long. And okay. Excuse me. Oh my goodness. Okay. Euro yen is a double bottom here, 111.5. It's 114 figure right now. It's pretty far away. Again, we're looking at the weeklies. We got to close 1, 2, 3. What's this close? This closes what? Oh man, I hate this thing. The close was 114.03. It's a lower close. If it was up close, it would be definitely showing spike up. But it's not in an uptrend yet. But I would be looking to buy dips in euro yen. 113.5. It's good shot. If it dips below this double bottom, obviously, it's a reversal change. So, but still, I'm in the meantime, I'm looking to buy some dips in euro yen. That's where I'm going with that. Let's look at good old Aussie yen. Man, we nailed this one, but unfortunately, that wild day took us out. Unbelievable. We were long at 80.5. That crazy day that spiked down when the Fed did the $600 billion, spiked us, took us out, and then rallied, which was terrible. A lot of people got stopped out on that day. But this is definitely a clear breakup. Got to buy dips in this. This is probably going to 90. So I mean, the interest rate differential alone is killer in this. Traders love it because they're getting paid every day. Aussie dollar itself is a strong currency. It's kind of sheltered from it's kind of like the yen in a way. I mean, a lot of people buy the yen thinking because it's safe, but the yen, the Japanese have a lot of problems themselves, but Australia really is in good shape. I mean, it's very strong. It's its economy is rolling along. It's commodity-based economy. Commodities are rising because people are fearful of inflation. So, Australia is a good currency to have. That's for sure. New Zealand dollar is another one I'd be looking to buy dips on. Let's see if we can find that good old Kiwi. New Zealand dollar. Look at this move up. This was just intense. So, looking to buy dips in New Zealand dollar. 78.5 would be a good level to look at. All right. So I'll see you guys later on this week in the chat room. And remember, enjoy the party. Dance near the door. Good trading. Cheers.